Welcome to this explainer. State tax compliance can honestly feel like trying to navigate a maze in the dark. But if you're doing business in Colorado, or, and this is key, even if you're just an out-of-state remote seller shipping products there, you absolutely have to understand their sales tax permit process. Today, we're completely demystifying the whole thing.
Picture this. You wake up to a massive tax bill from a state you've literally never stepped foot in, $100,000. If you're a remote seller and your retail sales delivered into Colorado hit that economic nexus threshold in a single calendar year, you are legally required to get a permit and start collecting tax. Ignoring this is what instantly catches so many sellers totally off guard, and trust me, the risks of back taxes, penalties, and audits, they are severe.
Okay, let's dive into this. Here is our regulatory roadmap so you know exactly what to expect. First, who actually needs a permit? Second, gathering your application essentials. Third, navigating the application process. Fourth, fees, deposits, and local traps. And finally, maintaining your tax compliance.
Part 1. Who needs a permit? Let's figure out your tax obligations.
So, it all boils down to a concept called nexus, which is really just a fancy legal term for the connection between your business and the state. Now, physical nexus is the traditional way. You have an office, employees out there soliciting sales, or even just inventory stored in a Colorado third-party fulfillment center like Amazon FBA. Any of that triggers a physical presence. Economic nexus, on the other hand, applies even if you are entirely out of state. If you hit that $100,000 or more in gross retail sales delivered into Colorado in the previous or current calendar year, boom, you've got economic nexus. And just a quick note here, Colorado actually repealed their 200 transaction count threshold, so only the dollar amount matters now.
So let's quickly point out the specific types of businesses that are legally required to get this permit before collecting a single dime of tax. Obviously, in-state retailers selling tangible personal property are on the list, right alongside those remote sellers exceeding the 100K threshold we just talked about. But it also includes mobile food vendors, people selling from push carts, and flea market sellers. Actually, even charitable organizations making retail sales have to register, though they do get certain exemptions that we'll touch on later.
Moving on to part 2. Gathering your application essentials. Consider this your pre-flight checklist.
So the crucial point here is that you need to gather these exact details up front to avoid any frustrating application delays later on. You're going to need your Federal Employer Identification Number, or FEIN, though if you're a sole proprietor, you can just use your Social Security number. You absolutely must know your NAICS code, which basically classifies your specific business activity and makes sure you get the right tax updates. You'll also need your exact legal structure details, the precise date of your first day of sales in Colorado, and of course, valid proof of identification.
Now, you really need to pay special attention to the strict state ID rules here. If you are applying via paper form by mail, or especially if you are visiting a walk-in service center, you have to provide valid proof of identification. We're talking a Colorado driver's license, an out-of-state ID, a U.S. passport, or a military ID. Furthermore, if you send someone else to drop off the application for you, say an assistant, they must bring a photocopy of the valid ID of the owner or officer who actually signed the application. Seriously, do not let a forgotten ID derail your entire registration process.
All right, part 3, navigating the application process. Let's look at your 3 pathways. You essentially have 3 primary methods to actually apply. Step 1 is MyBiz Colorado. This is an integrated online portal, and honestly, it's best for brand new in-state businesses because you can register for sales tax, wage withholding, and trade names all in one fell swoop. Step 2 is Revenue Online. That's the Department of Revenue's direct portal, and it's absolutely fantastic for remote sellers or existing businesses that are just looking to add a sales tax account. The best part? Both of these online portals can often issue an account number the very same day. Now, step 3 is Form CR010, which is the physical paper application. You can mail this in or walk it into a service center, but fair warning, mailing it takes about 4 to 6 weeks to process.
And, well, this brilliantly illustrates exactly why you probably want to just use those online portals instead of paper. This is a detailed look at Form CR010. It can be quite intimidating, right? You have to fill out these really extensive sections regarding your business activity, labor market information, and precise worksite physical addresses. And no, you cannot just use a P.O. box or your accountant's address. Applying online completely demystifies this whole thing by walking you through all these worksite and labor data questions step by step.
Part 4, fees, deposits, and local traps. Let's talk about what this costs and where sellers usually stumble. Colorado actually has a highly unique prorated fee structure for the standard retail sales tax license. The state operates on this strict 2-year cycle that always expires at the end of odd-numbered years. Because of that, the fee actually drops depending on when you apply. So if you apply at the beginning of the cycle, say January to June of an even year, it's $16. But if you apply near the end of the cycle, July to December of an odd year, it drops to just $4. But right next to that tiny fee is a huge stumbling block: the $50 refundable deposit trap. When you open a standard retail license for your first location, the state mandates a $50 deposit. Charitable organizations are exempt from this, but everyone else has to pay it. The trap here is exactly how you get it back. It refunds automatically after you have collected and remitted $50 in state tax. The state warns aggressively about this. Do not, I repeat, do not manually deduct this deposit on your tax return. Just let their system process the refund automatically, otherwise you will throw your tax filings into complete chaos.
And speaking of chaos, we have to talk about the absolute biggest hidden trap for remote and local sellers alike. Colorado has over 70 home rule cities. Yeah, 70. Places like Denver, Aurora, and Boulder are home rule, which means they independently require their own separate local licensing and their own tax collection. Your state license does not cover you in these cities. If you have nexus in a home rule city, you literally have to go to their specific city portals, apply for their local permits, and remit taxes directly to them. It's a lot to manage, for sure.
Finally, Part 5. Maintaining your tax compliance. Life after you actually get the license.
So here's your ongoing compliance roadmap. On day 1, if you have a physical location, you are legally required to display your license conspicuously. Next, you've got to file your tax returns electronically via Revenue Online. The state is going to assign your filing frequency, whether that's monthly, quarterly, or annually, based entirely on your volume. Oh, and note that if your tax liability exceeds $75,000 annually, you have to use electronic funds transfer. Finally, remember that 2-year cycle we mentioned earlier? Standard retail licenses hard expire on December 31st of odd-numbered years. You have to renew it to keep operating legally. Don't forget that. Now, before we wrap up this explainer, I do need to give a clear, professional disclaimer here. Tax laws, economic nexus thresholds, and especially local city requirements change frequently. While this guide gives you a really comprehensive overview of the Colorado sales tax permit process, it is absolutely essential to consult the tax professional, a CPA, or legal advisor to ensure compliance for your specific business situation and to make sure you're up to date on the most current regulations. Managing state and home rules city tax requirements is, without a doubt, a complex beast, and every single business has its own unique hurdles. So I'd love to hear from you all. What is the most confusing part of managing local taxes for your business? Is it wrapping your head around the home rule cities? Determining your nexus? Let me know in the comments below. Engage with this explainer, share your experiences, and let's just keep learning from each other. Thanks so much for joining me today.